The world economy is continuing to take a hammering during the pandemic slowdown. Millions are out of work, of course, and struggling to pay their bills. On Wall Street, there's a warning shot that another mortgage crisis is on the way and that it'll be worse than the credit crunch of 2008. More on that then today from Caleb Maupin.
In 2008, there was a global financial meltdown that affected almost every country in the world. Homes across the USA were foreclosed, and it appears we're heading in the same direction right now. Donald Trump signed emergency legislation on Friday, giving anyone who has a federally backed home loan the ability to apply for a 180-day forbearance. Now, that will take the pressure off of homeowners. However, it means that payments on over $7 trillion of federally guaranteed mortgages could stop, and that leaves the banks without money. Now, the Federal Reserve tried to save the situation by issuing over $250 billion in the hopes of driving down interest rates. Now, this is a temporary measure aimed at helping banks get through the crisis. But the bankers are showing signs of panic. The Mortgage Bankers Association penned a letter to regulators on Sunday, saying that the U.S. housing market is in danger of large-scale disruption.
The government has decided to try to throw money at this. That was a problem back in 2008 and 9, but it had some sense because then it was a credit crisis. Now the basic crisis is the virus and the cutting of production and all business activity, which is a very different problem. And so throwing money is not a good solution. When the virus arrived, it found an already debt-dependent, weak economy. The problem has gotten worse, but the solution hasn't adjusted to the greater problem and the different problem.
As Americans are staying home and trying to keep healthy, they now have images of the 2008 economic horrors flashing through their minds. This can only add to the current stress. Caleb Maupin, RT, New York.